Managerial accounting, break-even point in sales dollars. Now, once again, we're looking at our contribution margin income statement. And remember that our price per unit was given as $20, our variable cost is $5, that yielded a $15 contribution margin per unit, and our total fixed costs were $500. And we've calculated break-even point in units, but suppose instead of production being interested, that the president wants to know what break-even point is, and the president thinks in terms of whole dollars rather than in units. So we need to be able to answer his question of how many sales dollars do we need to achieve given this set of relationships in order to reach break even. So that's what we're going to look at now, break even point in sales dollars. And remember also our shortcut formula for break even point was total fixed cost divided by contribution margin. But when we calculate it per unit, then we use contribution margin per unit to get break-even point in units. Now what we want is not break-even point in units, but break-even point in sales dollars. And to get that result, we need to know the contribution margin ratio, which is nothing more than contribution margin stated as a percentage of sales. So the contribution margin ratio is equal to contribution margin divided by sales. Contribution margin divided by sales. Now you can calculate this either using totals. Our total contribution margin on our contribution margin income statement was $375. And our total sales was $500. So $375, do the math, divided by $500 is 75%, 0.75. So our contribution margin ratio is 75%. Now you can also calculate this using the per unit information. Our contribution margin per unit was $15, and our sales price per unit was $20, and 15 divided by 20 is also 75%. So it doesn't matter what you're given. If you're given just total information and not the per unit, it's not necessary to calculate the per unit. Total contribution margin divided by total sales will give you the contribution margin ratio. If you're given per unit information and not the total, it's not necessary to multiply it out. Per unit contribution margin divided by per unit sales price will still give you the contribution margin ratio. Now that we've got the ratio, we come back to our break-even point formula. And our break-even point in sales dollars for this set of data, total fixed costs, remember our total fixed cost for this data was $500, divided by the contribution margin ratio of 0.75, and 500 divided by 0.75 yields another odd number, $666.666. So approximately $667 is our break-even point in sales dollars. And since we sell at $20 per unit, would actually be a little bit higher than that because this would be a partial unit. So that's how we convert break-even point from units into break-even point in sales dollars to answer the president's question.